Okay. So we are going to see chapter 8, underwriting. What is underwriting? And I hope most of you here know what is underwriting. So underwriting is the most important part of the insurance company and most precious department of the insurance company. There are two important departments. One is actuary, another one is underwriting. So both plays a very vital role in the risk analysis, product development, product pricing, and on the profit and loss of the insurance company. So these two departments plays a very vital role. Without these two departments, the insurance company cannot survive. So actuary is a different topic. We'll maybe if we have time, we can review that at the end of this session. But underwriting is which is one of the core we should know, and we'll see to that what is an underwriting. So underwriting is a process of, it has three aspects. One is evaluating, selecting, and assuming the risk. So proposal insurance, somebody is applying for a insurance. Okay, so they receive the application form. The application form, it will go to the underwriting table. So the underwriter will review that proposal form and they will give the approval whether to accept the risk, accept the policy, issue the policy, or to reject the policy, or to modify anything in the policy. Any of these three decisions they will take. So after underwriter's approval only, the insurance company will issue the policy to the policy holder. So it is under the authority of the underwriter to approve, reject, or modify the proposal. So most of you sitting here at one point of time, maybe you are at the starting of the career. So whatever like exams you are trying to appear in triple I, you are trying to become an underwriter. So every insurance policy has an underwriting department. Most of you here may be looking for life insurance underwriting. So that is your core department. But there are non-life underwriting and life underwriting. So every aspect of the insurance department will have an underwriting. So it depends upon how you evaluate the risk. So as a medical underwriter or a life insurance underwriter, you will evaluate the health of the person, whether the person is healthy or not, to give an insurance, life insurance policy. Likewise, if somebody is applying for a motor insurance, they will inspect the for example car insurance. They will inspect the car, whether the car is in proper condition, whether we can give an insurance to the car or not. So like that, the underwriter of the car insurance, non-life insurance, they will evaluate the risk of that car. So the underwriter role is not going to change. They are going to evaluate the risk. How they are evaluating the risk, it will change according to department to department. So they are evaluating, selecting, and assuming the risk. Okay, assuming is you cannot predict the risk accurately. You need to assume. Okay, with our experience. So this is the most critical function in insurance. Okay, and potential liability to the insurance company, because liability is something current. Liability is current. If you are accepting an insurance policy, if an underwriter is accepting an insurance policy of 1 crore, that means insurance company liability is 1 crore. அவங்க வந்து ஒரு 1 crore கடன்ல இருக்காங்க. கடன்லனா somebody is going to die, they need to pay 1 crore. That is the liability of the insurance company. So who takes the liability? The underwriter takes the liability. So insurance company is profitable or going to be in loss depends upon how the underwriter is going to work. So poor underwriting will lead to loss. Proper underwriting will lead to profit. I'll give an example for better understanding. we'll see like a cancer cover. The insurance company is releasing a cancer coverage. Okay. Threshold. This threshold, in the threshold யார் define பண்ணுவா அப்படின்னா actuaries. They actuaries define the threshold, or they define depending upon the prior experience, or they will decide on the mortality table, morbidity table. There are a lot of tools to analyze this threshold. So they are deciding 10 deaths per 1,000 policy per year. Okay. So they are expecting 10 deaths. 1,000 policy issue பண்ணா அதில் 10 பேர் இறக்கலாம் அப்படின்ட்டு they are deciding on the threshold. So with this threshold, they are deciding the sum assured is 1 lakh. Okay, per policy is 1 lakh. So risk, they are deciding the risk. So 1 lakh policy, 10,000 policy we are going to issue. So அதில் 10 பேர் வந்து கண்டிப்பா இறப்பாங்க ஒரு 1 yearல. They are definitely going to die அப்படின்ட்டு decide பண்றோம். We are deciding it. That means 10 lakh rupees we need to spend every year to pay out the claims. That is the liability. We are already deciding the liability. இதுல இருந்து எப்படி லாபம் கொண்டு வரதுன்றத பார்க்கலாம். So premium, எவ்வளவு premium collect பண்ணுவீங்க? So 10 lakh is going to be the liability. ஒரு வருஷத்துக்கு இன்சூரன்ஸ் கம்பெனிக்கு யுவர் செலவுன்னு பார்த்தீங்கன்னா 10 lakhs. So you're going to spend 10 lakhs every year for 1,000 policy. So 10 lakh divided by 1,000 is 1,000 rupees. So 1,000 rupees you need to collect from each and every policy holder to cover the 10 lakh rupees every year. So this is decided. So premium we have decided 1,000 rupees. We have decided depending upon 10 deaths. Okay. So now the underwriter role is to make sure the deaths are happening not beyond 10. It should be below 10. That is the underwriter role. So underwriter, when they are approving the policy, they need to be very strict evaluating the proposed form, application form, medical records, prescription history, everything they need to see, and they need to make sure when they are issuing this cancer coverage, nobody is going to, no, there is no more than 10 death happening in a year. If we are doing poor underwriting, the underwriter don't have that much of knowledge. They are doing very poor underwriting. The department itself is doing poor underwriting. Okay. So now after issuing the policy, 15 deaths are happening. That means the next year 15 claims will come for 1 lakh. That means 15 lakh rupees the insurance company has to pay. So we have collected 10 lakh rupees as a premium. Now the first year we are paying 15 lakh rupees as a claim. That means already we are in 5 lakh rupees loss. This is poor underwriting. If we are doing proper underwriting, instead of 10 deaths, what is being expected, assumed, we can expect only 7 deaths per policy. So 7 lakhs is the claim amount or the liability, and the insurance company will end up in 3 lakh rupees profit. So this is the difference between what is the plan we are deciding, poor underwriting and proper underwriting. Any questions? Okay. So business model. We need to do a pool large number of homogeneous exposures. Homogeneous exposure means same risk. Same risk means I told cancer means we are covering the cancers altogether. Like that CAD risk means we are covering the CAD altogether. So pool large number of homogeneous exposure means we need to cover more number of people in the same group so that the risk is covered and we are not going beyond the expected mortality. So we have a large group. Small group means the claim will increase. Large group means the proportion of the claim will be decreased. This I think we have initially seen. 10 பேர் பாலிசி வச்சிருக்காங்கன்னா the claim may be expecting 2 claims. Same proportion we are giving insurance policy for 100 people. We cannot expect 20 claims. Okay, it will reduce. Maybe 15 or 12, like that it will reduce. So the number increases, the claim decreases. So the underwriting process will work in 3 phases. One is evaluation, second one is selection, the third one is acceptance. That is assumption of risk. Okay, evaluation is simple. So when somebody is applying for an insurance, so you need to take the proposal form, evaluate carefully, and make sure like everything is filled in the proportion form. And if you need any additional question, ask them. Make sure it is clarified, and then you issue the policy. This is evaluation. If it is a very small risk, for example, small risk in the sense, I'm not talking about small group, small number or large number. I'm talking about small risk. Small risk is somebody is applying for 10 lakh rupees policy. That is small risk. When somebody is applying for 10 crore policy, that is high risk. Because if we go wrong, small small risk will not have a big loss. 10 lakh rupees வந்து பெரிய loss இருக்காது insurance company, even if you make mistake. But 10 crore policy, if you make mistake, that will be a huge loss for the insurance company. So depending upon whether it is a small risk or large risk, there is automated underwriting also we can do. Now there are a lot of algorithms in the system itself. You just apply, you just fill out the risk, whether it is a smoker, patient have CAD. You just fill out all the form, it will automatically give the rating. So now the technology has improved. Selection as we have seen about automated. We'll see about manual also. So selection is whether right or not right. Right is WRITE. Okay, whether to give policy or not to give policy. That is the selection. So now you are evaluated. Now you need to decide. So rule 1 is large volume of business. Okay, so you need to keep 2 rules in mind. One is rule 1 about large volume of business. So when you are doing a large volume of business, you're actually avoiding the major losses. When you have very small business, the proportion of claims may be higher in case of small business. So the probability of loss will be very less in case of large volume. So you are avoiding the bad risk and higher loss proportion. So rule 2 is market forces. There are a lot of competition. There are a lot of insurance company now in India. So if you issue a policy, you need to make sure you are giving in a competitive premium. If you charge higher premium, nobody is going to buy insurance company. If you are going to charge very low premium, then everybody who is having disease and disorders, they are going to come and apply insurance for you because you are charging very low premium. So you need to have a balanced approach. Not too low, not too high. It should be a competitive business, competitive premium, so that people tend to attract towards buying the policy in your company. The third phase is acceptance. Now you are decided whether to write or not write. Then you need to decide whether to accept and issue the policy. When you accept, you're done. Okay, after that you cannot change. You have issued the insurance policy. That means the liability has already started. So when you are issuing a policy document, you should clearly mention the sum insured, what are the coverages, what are the deductibles, what are the warranties and condition. Everything should be very specific. We have seen one example, no, previously. Uh, the heart ailment, some of the heart diseases are not covered under certain circumstances. That is a bad example. You cannot give the wording like that. You need to be very specific. What are the warranties? What are the conditions which we are not covering? Okay. Underwriting framework must clearly say who you are going to accept, what the risk you are going to accept, and what is the amount. Okay. யார் அக்செப்ட் பண்றீங்க, எந்த ரிஸ்க் அக்செப்ட் பண்றீங்க, என்ன அமௌண்ட் அக்செப்ட் பண்றீங்க அப்படின்றது வெரி கிளியர்லி இட் ஷுட் பி ஸ்பெசிஃபைட் இன் த கான்ட்ராக்ட். Just not binary. Yes or no. Binary is yes or no. Binary, I think you have seen in the, you would have learnt in the school ages. 0 1 is the binary, either 0 or 1 is the binary numbers. So yes or no. We cannot say yes or no. I accept the risk, I reject the risk. அது மட்டும் சொன்னா it is not going to, it will be very strict underwriting. You should have something in between. Modify. Either I accept the risk, either I reject the risk, or I modify the risk. Modify the risk is example. You are asking for 1 crore policy. Your risk is too high. So I don't want to reject you, but I'll reduce the face amount. I'll go for 10 lakh rupees. I'll give the insurance policy for 10 lakh rupees. This is modification. Instead of yes, no, you are changing maybe in a different way. So you are giving higher deductibles, lower limits, and insurance, reinsurance. Some risk are like you are saying this is very risky policy. I'm not going to accept on my own. I am going for reinsurance. I am approaching another insurance company to support that policy because the risk is too high. So these are all like different examples where we can modify the policy. So deductible, one more example is, so total claim amount they are saying, total face amount they are saying 5 lakhs. They are asking for 5 lakhs. Normal risk, deductible is something the insurer, the policy holder has to pay. The remaining amount the insurance company will pay. So normal risk la வந்து பாத்தீங்கன்னா, so the deductible is 10k. Insurer, the policy holder will pay, insured person will pay 10,000 rupees. The insurance company will pay 4,90,000 rupees if the claim is 5 lakh. If the risk is very high, the deductible they are increasing. They are not just reducing the, they are not rejecting the policy. Instead, they are increasing the deductible. Instead of 10,000 rupees, they are increasing 1 lakh rupees. உங்க ரிஸ்க் கொஞ்சம் அதிகமா இருக்கு. So deductible 10,000 பதில் வந்து you need to pay 1 lakh. So if the claim is 5 lakh, you need to pay 1 lakh. I will pay 4 lakhs. So that I am reducing my risk to from 4,90,000 to 4 lakh. So this is how the adjustment should be done. Any questions so far? Okay, great. So special features of life insurance underwriting. Okay. So a life insurance underwriting has one special feature, what is called section 45. It says you cannot cancel a policy after 5 years. Who cannot cancel the policy? The insurance company cannot cancel a policy after 3 years. Sorry, it's 3 years. That is contestability period. Contestability period means within 3 years, after issuing the policy, if there is any fraud, if they identify any fraud, then they can reject the claim. After 3 years, even if they identify a fraud, they cannot reject a claim. Example, some person has heart disease, okay, and he is applying for insurance. When he is applying for insurance, he is not disclosing that he is having heart disease. So he hidden the information. So this is fraud or misrepresentation. The person died after 2 years taking the policy. Now the insurance company is investigating the death, and they found out the person has heart disease before applying the insurance itself. So they can reject the claim. The same example, the person has heart disease and he has applied for insurance, and he did not disclose that he has heart disease, but he lived for 5 years. After 5 years, he died because of that heart disease. Now the insurance company, even if they identify that person is died because of that heart disease, they cannot reject the claim because of the Insurance Act clause section 45 contestability period. They need to pay it. So if the insurance company is going to identify any fraud, they need to do it within 3 years. Okay. Therefore, the insurance company must exercise utmost care when they are underwriting. They should be very careful. After that, they cannot do anything. So they need to screen, they need to analyze all the documents, unanswered question, medical examination, uh, financial underwriting like ITR, income tax return, accounts, whatever it is, all the documents they need to very clearly evaluate, then only they can issue the policy. So unanswered question is equal to waiver if insurer does not follow. I will tell you what it is. There is a proposal form. On the proposal form, there is a question. Uh, Question states, do you have any heart disease? And when filling that form, that applicant is intentionally not filling that answer. He didn't mention yes or no. He just left it blank. அவர் அப்படியே விட்டுட்டார் அந்த கொஸ்டினுக்கு. Do you have heart disease என்ற கொஸ்டினுக்கு எதுவுமே ஃபில் பண்ணாம விட்டுட்டாங்க. Now the duty of the underwriter is not to assume whether the patient has heart disease or not. They should go back and ask the proposed insured whether you have not filled this one. Now you say whether you have heart disease or not. The underwriter duty to fill it up. If they are not concentrating on a blank question, அது வந்து ஏன் பிளாங்க்னு வந்து அவங்க கேட்கல, அப்படியே விட்டுட்டாங்க. they have proposed they accepted it, and they have issued a policy without answering the question. That means they have waived out their right to reject a claim in relation to that question. Waived means அவங்க விட்டு கொடுத்துட்டாங்க. They have waived their rights. அவங்களுடைய உரிமையை விட்டு கொடுத்துட்டாங்க. எந்த உரிமையை விட்டு கொடுத்துட்டாங்க? ஹார்ட் டிசீஸ்னால ஏற்படக்கூடிய கிளைம்ஸ் அவங்க ரிஜெக்ட் பண்ண முடியாது. ஏன் ரிஜெக்ட் பண்ண முடியாது அப்படின்னா, the question is unanswered and they should have asked to answer the question, but they have voluntarily not asked that question. ஸோ அவங்களே வந்து கொஷினை கேட்கல. இன்சூரன்ஸ் கம்பெனி அப்ளிகேஷன் பண்ணும்போதே அதுக்கு ஆன்சர் கேட்கல. அதனால கிளைம் வரும்போது நீங்களே ஆன்சர் கேட்கல, அப்போ விட்டு கொடுத்துட்டீங்க, அதனால இப்போ உங்களால ரிஜெக்ட் பண்ண முடியாதுன்ட்டு the law of contract will say. Any question? Okay. So risk classification, I think you will know this. So risk will classified. Aதாவது any risk for an if I am the proposer, my risk is classified under whether it is a standard or preferred. Preferred is better than standard. Substandard means you will have higher premium, or decline. Decline means I am rejecting the proposal. So this is very simple. I think most of you will know. So section 45 implication is very important in terms of questions. Okay, underwriting landmines. Challenges. Landmines are challenges. Okay. So what are the challenges the underwriter will face? Adverse selection, convergence, accumulation, complex risk, underpricing. Underpricing I already explained. Okay. Adverse selection and underpricing are something related. So adverse selection is bad risk. Adverse selection is ஒருத்தவங்களுக்கு இன்சூரன்ஸே கொடுத்துடக்கூடாது, அவங்களுக்கு கொடுத்துட்டீங்க. Somebody should not be issued, you are issued a policy. That is adverse selection, wrong selection. That is bad risk. You are selected. You know, bad risks are attracted when you are underpricing. For example, so take this as an example, poor underwriting. So you have taken bad risk, 5 lakh rupees loss IDH. You have lost 5 lakh rupees. Now, to cover this loss, you need to increase the premium in the next plan. So instead of 1000 rupees, you will go for 2000 rupees to cover up this loss. So unnecessarily, you are increasing the premium. So if you are unnecessarily increasing the premium, the good people who is in good health, they won't take this policy. They won't continue this policy. They will go for some other company because you are unnecessarily increasing the premium because of your fault, poor underwriting. So the other insurance company, they will have a good underwriting. They will charge the same premium like 1000 rupees. So the good people will go for the healthy people will go for the next insurance company. They won't buy the insurance company with you, insurance policy with you. So that means only the bad people, the unhealthy people will be there, will be sticking with you because they won't get the insurance policy if they go and approach another company. So they will be sticking with you. So you will have only the unhealthy people. Unhealthy people மட்டும் வச்சிருந்தீங்கன்னா every year your claim will be increasing and every year you will be increasing the premium. At one point, you will just end up in loss and you won't end up in good underwriting. So this is bad risk, adverse selection. If you select bad risk, you will increase the premium further and it will spiral for deterioration. Again, it will increase the claim. Again, you will increase the premium. Again, it will increase the claim. So it's a never ending process. This is the challenge. Convergence. Convergence is concentrating on only one line of business. You should not concentrate on only one line of business. If you have motor vehicle insurance, you should have some car insurance, you should have bike insurance, and you should have some cargo insurance, you should have some health insurance. Everything should be there. If you have a diversified portfolio in your business, you are not going to face any major loss. For example, if you are having only bike insurance in some specific area, some flood is getting affected. So you will end up in very large volume of claims because you have convergence. You have concentrated all your business in one area. Anything happens to that area, it will have a huge loss. So you should not concentrate on one area you should have a balanced business. Accumulation same. Instead of line of business, you are concentrating on geography. Geography is one area. So example, like you are covering all flood insurance in Valacheri area. Valacheri area already prone for flood. So if you are covering all flood insurance related only in Valacheri area, Definitely every 5 years or every 4 years, you are going to have a huge claim and you are going to face a huge loss. So you should not concentrate on one area or very high risk prone areas. Complex risk. So when you are writing a very complex risk, that patient has heart disease, patient has cancer, and you are trying to accommodate that policy, then you need to rely on some other insurance company to support you for reinsurance, so that the complex risk are, your risk is being divided. For example, we'll take some big shot is applying for 100 crore insurance. 100 crore insurance is something, is a big business. For 100 crore insurance, definitely they are going to pay at least 50 lakhs premium per year. 50 lakhs premium is a very big business. You don't want to lose that business. At the same time, you are not going to you are going to cover a very big risk, that is 100 crores. If anything happens, 100 crores loss will happen. So you are trying to maintain a balance between the collecting the premium and accepting the risk. So you're approaching a insurance company, reinsurance company. You are saying, okay, 50 lakhs premium is coming. We will share it with you. 25 lakhs I will take, 25 lakhs you take. If claim is coming, for 100 crore, 50 crore I will accept, 50 crore you accept. So this is the way they do for complex risk underwriting. Underpricing. Underpricing we have already seen. So if you tempt people with underpricing, very low price, you will attract bad risk and it will end up in increasing the premium in next year. Okay. So underwriting, any questions so far? Okay. Underwriting framework. Underwriting framework is risk classification and rating. Okay. So risk classification and rating is, okay. So risk classification is very simple. You need to know what is the risk you are going to cover. You need to know what is the peril you are going to cover and what is hazard. இது மூணுத்தை வச்சு தான் வந்து நீங்க ரிஸ்க் கிளாசிஃபிகேஷன் அண்ட் ரேட்டிங் பண்ணுவீங்க. வாட் இஸ் த ரிஸ்க், வாட் இஸ் த பெரில் அண்ட் வாட் இஸ் த ஹசார்ட். இது மூணுத்துலையுமே டிஃபரன்ஸ் இருக்கு. வில் சி தென் வித் அன் எக்ஸாம்பிள். ரிஸ்க் இஸ் எதை இன்சூர் பண்றீங்களோ தட் இஸ் கால்ட் ரிஸ்க். ஓகே. பெரில் இஸ் what is going to cause the loss. Hazard is what is going to increase the chance of the loss. அதாவது இப்போ நம்ம கார் கவர் பண்றோம்னா கார், if you are going to cover car is the risk. Peril is accident. Hazard is what are the scenarios which will increase the accidents. Simple. With these three, we will classify the risk and rating. So motor insurance, we'll take in an example. Motor insurance. Motor insurance risk is what type of car. What car is the risk. And the car என்ன type? It varies with the type. Sedan car, SUV car, sports car, commercial truck. Sedan car, only 4 people will travel, very less risky. SUV, big car, maybe 7 people will travel, anything happens, 7 people will meet with an accident. Sports car, more risky, speed, more risky for accidents. Commercial truck, again, is very risky because it will always be in travel. Peril, possible cause, accidents, theft, flood, and fire. What are the hazards? Young driver may increase Young driver, they are always, their adrenaline will be very high. They will try to ride harsh speed. Okay, so young driver are always risky. If you are a middle-aged person, probably you may drive more responsibly. That is an assumption. Drunken driving, poor road condition, high theft area. So these are all like hazards. So an example, when we see an example, we'll see risk, peril as well as hazard. A sports car, that is a risk, driven by 22 years old person. Okay, young driver, that is an hazard. In a flood prone city, that is again a hazard. High risk. A sports car, 22 years old, flood prone city, high risk. Okay. A family sedan, 45-year-old person is driving with clean history, no driving, no drug abuse, no drug DUI history, anything. Very low risk. So this is how you rate risk classify based upon peril, risk, and then hazard. Any questions? Okay. Acceptance limits. So maximum amount risk that can be accepted at each level. Okay. So that should be decided based on the capital and reinsurance. Underwriting guidelines. So underwriting guidelines should be given to all agents and sales forces. They should know what is the underwriting guidelines for standard. They should know what's the underwriting guidelines for rating. And now it is available in mobile apps. Underwriting manuals. So now the underwriting manuals are available for each and every company. They have their own underwriting manuals. So they are all also called as standard operating procedures. So this is how the risk should be classified. So updating the underwriting manuals, it should be dynamic. So underwriting manual before 5 years will be different. Now it is different because change is happening in everywhere, in health industry, treatments, everywhere. Now the change is happening. So underwriting has to be changed accordingly. Underwriting audit. So checks, you know, underwriting audits is internal audit or reinsurance audit. We can do two ways, external or internal. So internal audit, it should happen because we should check whether the audit process is happening correctly or not. So we cannot just accept whatever underwriter is doing. We should also check whether they are doing it correctly. So these are all the underwriting framework. Finally, we'll see about regulatory compliance in underwriting. So what are the regulatory compliance? So board approved underwriting policy. So it should be there. It should be approved by board of directors. Every department, every insurance company will have board. So they should approve this underwriting policy. So file and use and file regulation. That means, you know, whatever like decision you're taking, you should file it because you know when a claim comes, you may not remember whatever underwriting decision you have taken before 5 years, and you will be questioned. So you should document everything, whatever you have decided on the case, so that and it kept on the repository. Whenever you want to take it and reference should be made, it should be made. Reinsurance regulations. So this is another regulatory mechanism. If you have reinsurance, so reinsurance regulations will have audit, internal audit process, underwriting audit process, everything they will have. So protection of policyholder regulation. We have seen that in the Consumer Protection Act. Okay. So the policyholder, whenever there is a dispute is happening, The preference will be given to the policyholder, not the insurance company. Product must be fair and non-discriminatory. Non-discriminatory, it should not discriminate male versus female, sex. It should not discriminate with religion. It should not discriminate with caste. It should be, you know, purely risk. It should not be a discriminative product. That's all from my end on this underwriting. If you have any questions, we can discuss it now.